Hi everyone, very good evening and welcome back to CrackGradeB. So in this particular lecture, we'll start talking about financial leverage. Yesterday we were talking about the operating leverage and today we'll be completing the financial and the combined leverage together. So before we start this particular topic, yesterday we have read what is the meaning of leverage, right? And whatever we have already understood in the operating leverage, the same kind of things will be repeated in the financial leverage as well, but with a twist. Okay, so over here we will be discussing that when we use the financial sources to fund our activities, right, which is different from your business activities, what is the impact of it onto the income of your equity shareholders? Because that is the ultimate statistics that we are trying to capture. Okay, so that is the ultimate thing we are trying to capture. Let's talk about financial leverage. So financial leverage, it is defined as use of funds with a fixed cost in order to increase the earning per share. Because why we are using the fixed cost funds, why we are using the debt funds? Because we want to increase the earning for our debenture holders, or for the debt that we want to increase the earning for our equity shareholders who have invested the money in unto our enterprise, right? They have taken all the risks related to our entity, and that is why we are trying to give back to them. Okay, so in other words, it is the use of company funds on which it pays a limited return. Financial leverage involves the use of funds obtained at fixed cost. So in the whole leverage chapter, we are talking about the fixed cost funds and their impact. ठीक है, fixed cost funds और उनका impact क्या है? In order to increase the return to common stockholders mean equity shareholders. Now, what is the degree of financial leverage? How we are going to measure that? So the formula in order to measure that is percentage change in the earning per share. If there is percentage change in the earning before interest and tax, right? So if there is 100% change in the EBIT, what is the percentage change in the earning per share? Yesterday we saw the tentative profitability statement. In that we have seen sales less variable cost, contribution less fixed cost, you will get your EBIT. EBIT less interest, you will get your EBT. You are going to deduct taxes out of it, and that is after deducting the preference dividend, you are going to reach for the earning per share for the equity shareholders, right? So this is what degree of financial leverage is. Financial leverage is the ratio of percentage increase in the earning per share to the percentage increase in the earning before interest and taxes. Financial leverage is also defined as the ability of firm to use fixed financial charges to magnify the effect of changes in EBIT on EPS. Between EBIT and EPS, we have to pay interest, right? To debenture holders or for the bank loans, that is also fixed cost. We have to pay the dividend to the preference shareholders, right? That is also a fixed cost because the dividend percentage for preference shareholders it is fixed. ठीक है, dividend percentage जो हमारे preference shareholders के लिए है वो fixed है. So both of these are fixed cost funds which we are using, right? One is the tax deductible item, another one is not a tax deductible item, but still they are having an impact on EPS. If our EBIT increases, then it will have the proportionate impact on EPS as well, and this is what we are trying to measure through degree of financial leverage. If the degree of financial leverage is more than 1, then the financial leverage exists. More is the degree of financial leverage, higher is the financial leverage, right? A positive financial leverage means you are operating higher than the break-even point. That means you are not making the, you are not at a situation of zero profit or zero loss. You are operating above than that, and EBIT and EPS, they are moving in the same direction. That means they both are in the positive direction, right? But negative financial leverage, it means what? That you are operating at lower than break-even point. Lower than break-even point, you are not having means you are in a loss making situation, okay? And your EBIT, EPS, they are moving in the different kinds of directions, okay? Now let's see this. See, financial leverage, if it is positive, EBIT level is more than the fixed financial charge of debt as well as your preference share dividend, right? If it is undefined or infinite, in that particular case, The firm is operating at a financial break-even point, no profit, no loss. Next, if it is financial leverage is negative, अगर आपका financial leverage negative है, then means EBIT level is less than the fixed financial charge and EPS is negative. You are not earning the profit, you are in the loss-making situation. So that is what is suggested over here. Now, what is the analysis and interpretation of financial leverage? So, no fixed financial cost. If you do not have any debt-related cost or any preference share-related cost, then there is no financial leverage. If you have higher fixed financial cost, right? So in that case, you will be having higher financial leverage because you are taking the benefit of your fixed cost a lot over here. ठीक है, आप अपने fixed cost का अच्छे से benefit ले पा रहे हैं. Then you have when EBIT is higher than the financial break even, you have positive financial leverage. When EBIT is less than the break even, you are having negative financial leverage. That means what? If your EBIT earning before interest and taxes is less than the break even, that means you are not making profit. You are not making profit, it means that whatever fixed charges funds you are using, they are not causing a profit to you, right? And you are into a loss making situation. So that is the relationship. Now, financial leverage as trading on equity. Now, this particular term is also used. Financial leverage is equal to use of fund with fixed cost, right, and equity share capital, long-term debts. Trading on equity, fixed cost fund greater than the equity capital. Trading on equity का मतलब क्या होता है? Same concept over here, that we are using the fixed cost to increase the return to equity shareholders. And if you see in the trading on equity situation, the fixed cost funds, it will be higher than the equity capital. That means you are using more fixed cost funds as compared to the equity capital. Equity capital से ज़्यादा जो है आप fixed cost fund use कर रहे हैं. Okay. Financial leverage, it indicates use of funds with fixed cost like long-term debts and preference share capital along with the equity share capital. So when I say fixed cost in the financial leverage, I mean to say long-term debts as well as the preference share capital. Both are included into my fixed cost financing as and when I talk about the financial leverage, right? Now, what is the basic aim of financial leverage? So, basic aim is to increase the earning. This is the primary aim of financial leverage. What is the primary aim? Aim to increase the earnings which is available to the equity shareholders. We want to increase, see, at the core of any business, what they want, that whosoever has invested into their business, they should be able to give them returns back, right? If आपने मेरे business में 100 रुपए invest किए हैं, तो मैं आपको 200 रुपए return में दे सकूं. That is the aim of every business. So that is what they are also talking about over here, that if we are using the fixed cost funds, what we are trying to do is that we should be able to give our equity shareholders a lot money, right? What they have invested. Right. So, if you are going to give the growth, more equity more equity investors will be attracted towards you. You are going to get more stable kind of funding, right? As we compare the debt and equity, equity is the kind of which brings more stability. It has got more risk appetite, right? All those things are there. A firm is known to have a positive leverage when the earnings are more than the cost of debt. Obviously, if I am using a certain instrument for my benefit, right? So the benefit should also appear to me. I am paying 10,000 rupees as interest charges, then my earning should be 20,000 rupees. If my earning is not positive, then I am not able to utilize the debt funds efficiently. तब मैं अपने debt funds को इतना efficiently utilize नहीं कर पा रही हूँ, right? If earnings are equal to or less than the cost of debt, it will be negative, unfavorable leverage. When the quantity of fixed cost fund is relatively high in comparison to equity capital, that means firm is trading on equity. The difference between financial leverage and the trading on equity is financial leverage is existing on all the levels, हर level पे. You might be using lower amount of fixed cost capital, you might be using higher amount of fixed cost capital. But what does trading on equity means? It means to say that if you are using more fixed cost capital as compared to your own equity capital, then it means you are trading on equity, right? That is the definition that they have provided. Now next thing is at financial break-even point. Degree of financial leverage will be infinite. These are the factual things which you need to remember, right? That means what will be the relationship between the degree of financial leverage as well as your break-even point. If you see at the start of this particular page, there was a table that was drawn कि क्या relationship होगा, right? And this is something you have to remember. When EBIT is slightly less than the financial break-even point, degree of financial leverage will be negatively infinite. With further reduction, DFL will move towards zero. At zero EBIT, DFL will also be zero. ठीक है? अगर आपके पास में earning before interest and taxes है ही नहीं, then how you are going to show the impact on financial leverage, right? You cannot show that particular impact. Now let's talk about the combined leverage. If you refer the diagram that we have read yesterday, you will see that the combined leverage talks about your operating as well as the financial leverage together. ठीक है, दोनों को साथ में रख के they are trying to find out that what is the impact of fixed cost funds. So combined leverage may be defined as the potential use of fixed cost, both operating fixed cost as well as the financial fixed cost. Operating fixed cost, I have borrowed funds to purchase an asset. ठीक है, मैंने एक asset purchase करने के लिए जो funds borrow किए हैं, so that was my operating requirement. Okay, that was purely operating, the amount of investment which I have done in my asset, which magnifies the effect of sales volume changes on the earning per share of the firm, right? So combined leverage is operating leverage multiplied by financial leverage, impact of both these kind of things together. Now what is degree of degree of combined leverage? Let's see this. So it is relationship between percentage change in sales and percentage change in EPS. What is the percentage change in sales that brings the impact onto the EPS? ठीक है, sales में अगर कुछ change हो रहा है, then what is the consecutive impact onto the EPS? This is what we will study in the degree of combined leverage. Degree of combined leverage, it is the ratio of percentage change in the earning per share to the percentage change in sales. It indicates the effect of changes in sale will have on EPS. Like operating leverage and financial leverage, combined leverage can also be positive as well as the negative. Both kind of things can exist. See, analysis of combined leverage. So let's see this. Combined leverage is also called as total risk. ठीक है, हम इसको और क्या कहते हैं? Total risk. It depends on the combination of operating and financial risk. Now, if your operating leverage and financial leverage, they both are low, then combined leverage will also be lower. That means lower total risk as well. Cannot take the advantage of trading on equity. आप इसका advantage नहीं ले पाएंगे. If both are high, higher total risk, it is a very risky composition because you will be facing business related risk as well. If suppose in my business I have invested into a machinery which is costing me 10 lakh rupees, right? And suddenly technology changes. ठीक है, अचानक से अगर टेक्नोलॉजी चेंज हो जाती है, देन व्हाट दैट मीन्स, दैट ब्रिंग्स बिजनेस रिस्क फॉर मी. ठीक है, वो मेरे लिए क्या लेके आता है? बिजनेस रिस्क को. सो दैट इज व्हाई इफ माय बिजनेस रिस्क इज आल्सो हायर एंड आई हैव टेकन द फिक्स्ड कॉस्ट फंड्स ऑन अ हाई इंटरेस्ट रेट, सो दैट ब्रिंग्स फाइनेंसिंग रिस्क फॉर मी एज वेल. Operating risk is there, financing risk is there, and in total my combined risk will be higher. Now if your operating risk is high and financing risk is low, then your moderate level risk you are facing. Not a good combination. Lower EBIT would be there because you are having higher operating leverage. Because your operating fixed costs, they are higher, and that is why earning before interest and taxes will be low and lower advantage of trading on equities. Now, so hear me out on this particular matter. See, if my operating fixed costs are higher, and because of that I am having a low EBIT, right? So suppose I am only having 2 lakh rupees as my EBIT. Now what is the scope for me to borrow funds? I don't have much of the scope left over here, right? ज़्यादा scope है ही नहीं मेरे पास में borrow करने का. So this is what there is lower advantage of trading on equity, because then you are not allowed, by virtue of having lower EBIT, you do not have sufficient funds to allocate for interest. ठीक है, interest के लिए allocate करने के लिए you do not have the sufficient funds, and that is why you will not be able to do efficiently trading on equity. Next we have, if your operating leverage is low and financial leverage is high, so this is the best combination, because higher financial risk will be balanced by the lower total business risk. You, in this case, you will be having the higher EBIT. आपके पास में EBIT अच्छे amount में होगा, earning before interest and taxes, and that particular thing you can use and you can borrow more fixed capital funds, right? आप ज़्यादा fixed capital funds को borrow कर सकते हैं. You will be having a good amount of allocation to provide for the interest, right? And that is the best combination. So with that, we have completed your 3 kinds of leverage, that is your operating, financial, as well as the combined leverage, right? This is it in this particular class. Thank you so much, and tomorrow we'll be meeting with a new topic.